I mean, we know them as icons today, but what did they do to amass so much profit and keep, a consistent, profitable profile, right? So that's what we're going to discover in this video. These are 5 essential things. In fact, I would say 6 essential things that you must do, right? Those who are succeeding are doing it, right? And if you've not succeeded yet, it's basically majorly because one of these things or most of these things are lacking in your trading experience. All right, let's get to it, guys. We have just Livermore, right? That made 100 million, sorry. All right, dollars on the market, what Soros and Steve Cohen, right? These are the major guys, right? And there are many others, including me speaking to you. Here's our risk warning. Do what to look at it, all right? Go through it appropriately, get yourself, familiar to it before proceeding, all right? So let's get on to it. The very first thing is to focus more on risk management than indicators. Beginners, often they go crazy about strategies, indicators, and so on. All right, and they blow their accounts first before coming. Oh wow, I think I need to learn how to manage my risk, man. I'm doing nonsense on this thing, and it's very logical. You are new to something, right? Why not find out what makes it work first? I think that's very, very logical, right? Why not find out what makes it work first? Then you could come back and say, okay, yes, I want to do this thing this way, I want to use this way, this and that. And they completely skip that process. This has to do with your drawdowns, lot size management, risk to reward ratio, and so forth. And like I said, beginners like to blow their account first before coming back and taking note of risk management. Then like, oh, maybe I need to go and learn about this stuff. The most important thing about risk management is this. Number one, is very boring. The beautiful thing about this is that it helps you to grow and sustainably, consistently grow, and that's the beauty of it, right? Growing from $100 to $10,000 and so forth. It's beautiful, man. It's beautiful. I mean, no superhero stuff on the market. Let's say you can go from 100 to 10k, in a day or in a week or something like that. No, risk management helps you to build consistently and progressively, over time, and that's the number one most important thing, to know. That's what the big guys are doing, man. But no matter their account size, no matter their level and experience, they still manage their risk properly. It's super more important than indicators and your trading strategy. All right. The second thing is to focus more on risk to reward ratio than your win rate. Like I said here, you can have 90% win rate and still be in a loss, right? It's not a cost or anything. It's a fact. You could have a 90% win rate. That is, out of 10 trades, all right, you have 9 that are valid, all right, that hit your TP, all right. And this is super interesting. Why? Because choosing how much you lose, right, and how much you win, right, is so vital that at times you could invest it and think you're still doing the right thing, right? So let's take, for example, I'm making about 10 pips per trade, all right, and maybe I risk 20 pips always, right? I will need to be profitable twice, all right, to cover one risk, the risk of one trade. So I need to value 2 trades to cover one trade, all right, and so on and so forth. Meanwhile, if I risk 1%, for example, and my reward is 3%, so of course I'll have to lose 3 times, right, to cancel out, profit. And that's exactly what we're trying to see here. There is a video on how to manage your risk to reward ratio and so forth on the channel, so do just want to check up the links in the description. All right, and to do this, all right, is like, let me show you something in the market quickly. It's just like this is USD, for example, the daily, and let's say I'm a swing guy, and this is a nice sell here, right? Lower low, and then higher low, and then lower low again. So I tried to take a shot here. Maybe it takes a bounce, and I tried to take a shot. This is a previously tested with support, all right, turn to resistance. Okay, and I have my confirmation. Maybe this is my second bearish candle. I have my confirmation, and I want to take a shot. And I'm not stupid to come up with my stop loss here, and that's what a lot of beginners do. All right. So what I'll do instead is put my stop loss somewhere around here according to my rules, and then my TP, of course, will be 2 times or 3 times preferably. All right. my stop loss. So that would be this distance, maybe 124 to 120 pips, for example, or let's take 120 pips. All right, times 3. All right, so we have one, something like this, here. So it should be around here. All right, and that's how you work. So from that, you keep on with the same system, and so on. All right, and this is super important. Now, for you to be able to say that you want to take it buy or sell here, and predict that this currency pair will fall down to this level, you have to know something additional. And what I'm trying to get you here is that you should focus on your fundamental analysis. It's super important, guys. You cannot bypass it. All right, you have to see. You can't see further, like I always say on the market, without paying attention to the news. All right, and that's officially said by Joseph Adelaide. So, do you understand how the regulatory process of the European Union is working out? Do you know what's going on there? Do you know what's happening to the dollar right now? Right? No, you don't. Do you understand what's currently happening to the country, the economics of the pairs you're trading? You don't know. All right. You have to know. You can't just come here and then, I want to make an entry here, and I'm sure it's come here because of technical analysis. All right. Most beginners focus on technical analysis. They forget about the sentiments, fundamentals, and so forth. And guess what? In a few weeks, they blow their accounts as usual. All right. So that's super important, guys. Let's move on to the next thing. To HTFs instead. What HTF means is higher time frames. All right, and this will help you to make less engagements for most returns. All right, and the thing is this: when you master your higher time frames, there's less noise, there's less volatility, and so on, and the market is more stable. And this helps you to construct, all right, your experience properly and not make things in a haste. All right, I know there are guys that start from LTFs as well, time frames, and still make it. That's fine. All right, but the ideal thing is to start from HTFs. All right, and even as a very profitable guy, you notice you shift more. I found myself on the weekly chart, and I was like, oh, bro, where did you get from? Where get this from? And legit, I was taking trades, of 4 months, 5 months, and so forth, and it was chilled. All right, I just come and check what's going on and so on. And I think it's the same thing that all beginners should do as well. Professionals do this, and I think it's the same thing that all beginners should do. Master the higher time frames first. Then you could go to the lower time frames and do your scalp. Most scalpers lose money because they lack experience. All right, and as a beginner, day trade first. After your experience, you can now go and scalp because it's less volatile here. Learn when the water is calm. All right, before you throw yourself into an ocean with waves. All right, that's super important. It's not the number of trades you take, it's not your win rate or shit. All right, this is not a game. This is real, man. All right, it's your money that is in play here. All right, and we want to build something that is successful, something that is sustainable over time. So super important. Move to higher time frames. The fourth thing here, all right, is that you invest in knowledge instead of funding accounts directly. All right, I know a lot of beginners do this, right? They learn about one strategy, system. Oh, I can make a ton of money over this market. All right, so boom, they go and fund an account to one broker, and the broker will allow you to fund that account because they know you're going to blow it. All right, they are waiting for you to blow it because that's more profit to them. All right, they're not stupid, And the thing is this. All right, you are not directed properly. You do not have a mentor or instructor. All right, and that's one of the most important things, right, in trading. All right, getting appropriate direction. All right, that's going through a good course, super important, and having a mentor to guide you through the process is something you've never done before. It's something you do not know about. All right, it's your first time engaging with this thing, and you just want to get to it directly. All right, look at the school system. You go through from primary school, college, and so on, university, and some people even go to the degree of getting their PhD and so forth before getting to the professional sector. All right, and see how many years of training you have. Then for the market, you just think it's one thing, and just jump into it and then make it work. You joke, like someone says, you joke, boy. All right, super important. You have to be accountable to someone. You have to be properly directed, and you need to have a trading mentor. And those are 3 essential things we make part of our trading program in Trade Polo online services. So do well to find out those on our websites. Now, the fifth thing is to focus on other markets as well. All right. Now, this don't misunderstand this. This means, for example, let's get to the charts. I'm a USD guys trader. All right. So I actually want to know what the dollar is doing to the Bitcoin. I want to know what's doing to the this US 30. Right. I want to know what's doing to the Nasdaq. All right, and other pairs as well. I just want to know the impact of the dollar on all these things. And for example, you see BTC USD, going up. So something is going on. You see the Nasdaq going up. Something is going on. In fact, I do not even recommend that you do what since. Alright, so you could just check for correlating pairs with the Euro USD dollar. Alright, some of them could be across other things. Could be in stocks and so on. Could be in volatilities, not volatilities. Could be in indices and so on. So you have indicators. Alright, there are indicators essentially telling you that if the dollar is strong here, for example. Right, that means I'm getting the strengthening here. Let me see what's going on to the euro. The euro is falling down. I know this is telling me to buy here, and these are very, very few things that actually help you to become. But you have to know, man. You have to know why is there bearish. It's not just because of technical analysis. There's something else that adds to it that makes this daily candle, over 100 pips. I want to know why. Over the time, get experience. Just pick one pair, right, and get experience with that pair. Know why the market is like that, why it moves, how it moves, and what makes it move. That way you can be able to predict ahead of time its movement. All right, super important. Now I'm going to leave you a bonus tip here. All right, number one is to backtest your strategy, have a trading plan. All right, have a journal. Journal your shit, man. Come on, journal your mistakes every day, review them. That's the only way you can become better. I know it's stressful, it's annoying, it's boring, but you have to do it. You just have to do it. All right, study your mistakes. All right, if not, nobody will do it for you. Right? You have to do that shit yourself, bro. All right, that's super important, guys. So these are the 6 most important things. All right, that professional traders do, expert traders do. Right. Let me just say intermediate traders do, and beginners, most beginners, not all beginners, most beginners are not doing. Thank you.